Hey, what's good, everyone? We just wrapped up our training session for the week, all about trading mindset and psychology. So Dad has got an absolute stack session here that we just wrapped it up. I want to encourage you, when you're new to trading, you don't think mindset is a big deal, but I promise you it is the number one most important thing that you can focus on, because no matter what strategy you are trying, whether it's TrendForce or something else, you need to master your mind and your emotions. So lots of keys in this session. Enjoy it. Get your notepad ready, and we'll see you on the inside. Welcome everyone. Tuesday night training, excited for tonight. And before we get going as well, special welcome Melvin for getting started with us yesterday over here on the North Shore in Auckland from South Africa, same as probably about half of our community here in Auckland, originally from South Africa. And also in the last few days, at least sort of into last week, we had Nick, Alan, and Dean over in the States as well. So good to have you guys with us. And guys, brand new week. Weather's starting to heat up here in Auckland, but I know we're all over the world, different time zones, different weather systems. Either way, at least the charts look the same, depending on your time zone. Some of you get more preferable time zones than others. But tonight is going to be special because this journey of trading is very much a mindset game. And the longer you've been at it, the more you realize it is way more mindset than you probably ever believed when you got started. And so Dad has got tons of nuggets to share. We've done a few nights in the past on this. It's been a little while since we have, but he has got a lot of gold to share with us. And so we can get crazy technical on all things TrendForce, but the trick to truly following any set of rules and any trend, no matter how powerful that indicator, is still managing yourself, managing your emotions. And that's the beautiful thing about this trading journey, is that you are guaranteed to become a better human on this journey, because you are going to have to increase your ability to be more patient, more disciplined, and wait for the ideal setups. It's said very often that traders are paid to wait. And so we all need an injection of more patience and discipline and all other things related to mindset. And so I know Dad's ready to rock and roll. So I'm going to find you, pin you, and say a massive thank you for prepping what I know will be a lot of value tonight. So Dad, over to you.
Cool. Well, here I am. And good evening and welcome, especially to the new people that Ty's welcomed. And tonight it's about trading psychology. I think I said it last time that I did a bit of training on psychology. I used to get so bored when they announced with some of the mentoring we used to do. The mentor said we were doing psychology tonight. I said, boring. I wanted to the charts. I wanted to know how to make pips. I wanted to learn the best place to press buy and sell. But gee, how wrong I was, because it is so psychological. So I'm talking about the mindset tonight required to become a successful trader. It really all is largely in the mind. So I've made a lot of notes. In fact, I've got so many notes. I'm splitting this in half. So I'm going to do, it's a complete talk tonight, but then I've got another one for next month. I said to Ty, we haven't actually done enough, trading psychology talks. We focused a lot on the technicals. And tonight it's going to be different. I'm not going to show a chart tonight. So that's different for me. Normally I kind of look at the charts and I'm more kind of ad lib as it's all in my head. But I've made some notes here. I've got 10 points. I'm going to try to get through all 10 points. And it's all about the mindset needed to be a successful trader. And so Ty's already made the first point is this. The core truth is this: trading is a mental game. I didn't know that when I started. I had no idea. Somehow it wasn't emphasized enough when I started the mental side. You've heard me say many times, I thought trading looks so easy. Look, there's a signal. I'm sure I would have taken that one. There's a sell. I'm sure I would have taken that one. I would have left that one. It's so easy looking at a chart that's already played out. But when you're in the moment, and your emotions come into play, it's very, very different when you're trading live and you're taking signals. So we have to be mentally strong. That really is what makes a good trade, is how mentally strong we become. I like to say this: the market, it doesn't test our strategy, it tests our discipline, our emotional control, and our identity. So I want to say that again. The market doesn't test our strategy, it tests our discipline, our emotional control, and our identity. And so most traders fail not because their strategy is bad. It's not, at the end of the day, it's not the strategy that causes traders to fail. It's because things like they cannot follow the rules, or they panic too early, cut their winners short. We'll come back to that later. Or they hold losers too long. Those are the things that cause traders to fail, or they become too emotional. Their emotions end up ruling. And once your emotions take over, you're gonna make all sorts of mistakes. Especially we've said many times, holding on to losers. The hardest thing still is, when you're wrong, and you've got a losing trade, you've got to close it. It was part of our feed during the week. I think we spoke about it all towards the end of last week. But those things all work out to mindset and how strong our minds are. I mean, various percentages are thrown around, but generally they say that trading is probably around 80% psychology, 20% strategy. So when I started out as a trader just over 3 years ago, I thought it was all strategy. I thought if I could learn the strategy off by heart, I would be a successful trader. I had no idea how strong the mindset would be. And so I wanted to point to is looking at the three mindsets of a winning trader. And so there are three mindsets we have to have. And the first one is called the probabilistic mindset, because trading is all about probability. And someone once said that successful traders think more like casino owners, not like gamblers. Almost every casino is profitable and they only make about a 5% profit. It's a small profit, but it's almost guaranteed. The odds are always in their favor. They've got an edge, and I think they call it the house edge. Whereas gamblers take big risks, with uncertain outcomes. I mean, I don't gamble. I know what a roulette table is. I think the odds are 1 in 36, so people will bet large amount of money. They put it all on number 5, whatever the number is, and they've got a 36 to 1 chance of actually winning. I mean, that's a massive risk to take. I mean, you wouldn't trade if it was a 36 to 1 chance of winning a trade. And so we've got to think more like casino owners, on the balance of probabilities. All casinos, and I'm not promoting gambling tonight, and trading is not gambling, but we've got to think more like casino owners than gamblers. And so, I mean, it's all about probabilities. It's having a probability mindset. And so on the balance of probabilities, if you stick to our strategy, you will be profitable. It's been proven. I'm a profitable trader. I stick to the rules. And so if you stick to the rules on the balance of probabilities, you'll be profitable. Then you think more like an owner, than just like a risk taker or a gambler. In trading, no single trade matters, and that's what you got to discipline yourself to the point. You will lose, at some points, but everything you don't like. If you think of, I seem to be talking about casinos a lot tonight, so I don't visit casinos or gamble. But like if you think of a casino owner, they don't panic if someone wins at roulette or someone wins at blackjack. Because so now on the balance of probabilities, they're going to make money regardless of how many people win or how many people lose. And so no single trade matters. There will be losses, Every entry is just one event in a series of long trades. And talking about losses, once you have a probability mindset or probabilistic mindset, you don't worry about losses. They're part of the business. I heard someone once say, and I've never forgotten that losses are a business expense. And remember, they do come in groups, so that's just that I take losses now and then. It is inevitable. But when you develop a probabilistic mindset, you'll realize that on the balance of probabilities, you will make some losses, but most of the times you will be profitable. And remember, I went through the stats, I won't go through it again, but losses do tend to come in groups, After every 8 trades, they say, I think the number is you're probably going to make 3 in a row. And after 15, you may make 5 in a row. So don't get put off, if you go through losses. Don't think, now I'm on a losing streak. They do come in groups, but just see that as the business expense. We learn to grow through the losses we make. And also, because we deal in probabilities, we should always learn, I'll come more to emotions later, but never to attach emotions to outcomes. Someone once said that losses don't hurt professionals. And so always think, so the first part of a mindset, we're thinking probabilities. And the bottom line is, if you stick to the strategy on the balance of probabilities, you will become a profitable trader. Then the second part of a mindset of a winning trader is to be process orientated. So to really have a process orientated mindset. And I didn't start out like that. Amateurs, they tend to chase outcomes. They want to take as many trades as possible. They want to win as much as possible as soon as they can. And if you have that kind of attitude, you're just going to end up losing a lot. And you often see charts, they look like 2 rival Indian tribes that had a bow and arrow fight. They're just like blue arrows and red arrows everywhere, all over the chart. That's not the way to become a profitable trader. So we've got to be process orientated. We have to go through different processes. So it's developing like a process mindset. Even I have a process, and I'm hopefully most of you, you'll have a process before you start trading in the morning. I don't just turn my computer on and look for the first buy signal or the first sell signal. You need to know where key levels are. You need to know what the trend is. You need to focus whether your focus is going to be buys or sells. I think I've said that before. I look at the 4-hour chart and have a good look. I look at the key levels. I normally have it updated the afternoon before because I like to trade in the morning. And I look at the key levels. I look at trend lines, and then I have a good look. And I definitely have a bias. I think, either I'm going to be bullish or bearish today. So sometimes I'll say to myself, I'll take a look at the 4-hour chart. I'm not going to fight the trend. I'm only going to take buys, or I'm only going to take sells. So that's my process. I look at the 4-hour chart, and then I turn it back. Then it's a good idea to then turn it back to your chosen time frame. I think, the way I set up my charts, I put all my trend lines, all my fib lines on the time frame I'm trading, so usually a 3-minute chart. And then when I go back to the 3-minute chart, I then look at where all the lines are, how many come into play, and I look at those key levels. I'm looking where price could pivot off, where potential targets could be. So before I press buy or sell, I'm not trading blindly. There's the process, and that is why to be successful, we've got to have this process mindset that we go through a process. So again, part of the process is you've got to have clear entry criteria. You can't just turn on the computer. You see prices moving up, I'm going to press buy, or there's a bearish candle, I'm going to press sell. You've got to be really clear on your entry criteria. For me, it's signal only. I only enter a trade on a signal. And that's a good thing about TrendForce. There are normally multiple opportunities to enter. I mean, that's going to be next week's training, how to enter a trade that's already running. There are a lot of signals we can look out for in TrendForce. So I have clear entry criteria. I only enter on a signal. And I tell you, if you just stick to that, and then multiple signals, I won't go through all of them, but we got our buy and sell signals. There are the counter trend signals. There also there's buy and seller momentum. There's, breaking resistance and support with a lightning bolt. We've now added, breaking the 15-minute opening support or resistance line. The MACD gives us signals. There's bullish and bearish crossovers. There's triangle up and down. I mean, I think we counted I think there's up to 13 signals. And so there's no excuse. It's only lack of discipline that will make you enter a trade when there's been no signal. So for me, that's how I discipline myself. That's my process mindset. I have clear entry criteria. I only enter on a signal, and also things like no late entry. That's the key to taking losses is late entry. And I mentioned the other week how we were all in a different forum. There was a buy signal. Because I didn't have clear entry criteria, I didn't take the buy. And of course, within a few minutes, the feeds were coming on the posts were coming on the feed. I'm 20 up, I'm 15 up. So I entered buy, and then I got, I didn't know where to put I got stopped out for 20. And then, okay. And then the trade kept on going up. And then people posting, I'm up 50. So I pressed buy again, got stopped out for another 20. I think it was like a 70 pip trade, and I made minus 40. And I thought, how could I have lost 40 pips on a 70 pip trade on a nice bullish run? But I didn't have the discipline. I was late entry. I wasn't using signals. And if you don't have this process mindset and have clear processes that you've decided, the black and white things to trading, you're going to be lured in. We call them BFOs, big foreign objects. This big candle is going to appear. You're going to be convinced, it's the market's now bullish or the market's bearish. You're going to be lured in. And of course, you're going to be stopped out. And so you've got to have these things defined. You've got to have clear entry signals. That's the process mindset. You also have a clearly defined stop loss and target. That's the good thing, at least with the buy and sell signals, that there is a defined stop loss. So I always have a stop loss. I never take a trade without a stop loss. I also have a target. We have targets, TP1, 2, and 3. But sometimes there are other targets that I use. It could be a big round number. It could be a pivot. There are lots of pivots. It could also be things like key levels you have marked out on your high time frame chart, fib levels, etc. And of course, never increase your stop loss. And so that's another clear. This is all part of the process mindset. These things have to be completely established in your mind before you even press buy or sell. You can't think, okay, I'm going to take this trade. Then you got to think for a few minutes, where should I put my stop loss? Where's my target going to be? You need to know immediately. So, I mean, you should be able to have a good idea of where the target's going to be. If it's not a TP1, 2, or 3, you should be thinking before your signal. You should be able to read the market. Let's say there's been a bullish run and the market's beginning to turn. It's now turning bearish. Don't wait for a signal before you work out where your stop loss is going to be or your take profit. I'm already looking, okay, if it's a sell signal, it's going to generate a stop loss for me. There are potential profit lines, maybe, between TP2 and 3, there's a big round number. I'm going to put my take profit there. Those things have got to be etched in your mind. So that's the process mindset. Those things are clearly defined in your mind. Also, part of the process mindset is risk management. Most people lose money because they have no risk management strategy whatsoever. So with TrendForce, we're very strong. We have a rule we ask everyone to apply. We can't enforce it, of course, but never risk more than 2% of your account in any trade. That's how people empty the accounts. The stats, 90% of people, lose 90% of their money in 90 days, beginner traders. They blow accounts because they've got no risk management. So I never risk more than 2% of my account on any trade, never more than 2. So I have that boundary that's established. I just don't do that. If the market is very volatile, I will then risk less. I realize sometimes, if I look at my little trick is always to look at the gap between the big round numbers. So the Dow and the NAS are my common ones to trade. I look at where's the 100-pip gap. That gives me an idea of the candles. So Flip, I'm thinking this market is so volatile, I'm going to actually cut my risk. I'm not going to risk more than 1% on a trade because you may need, 50-pip stop loss instead of 20. So things like that, those must be etched in your mind. I've made those mistakes. Before I understood that, I didn't have the process mindset. I'd turn on the charts. I had no idea what the big round numbers were. This big candle came, I'd press buy. And when I dropped my stop loss, I was horrified. There was I needed a 60-pip stop loss. If that went south, I would have risked way more than 2% of my account. So all these things have to be, in our mindset. So we look at, again, the things we look at is clear entry signals. We look at where our stop loss is going to be. We never increase our stop loss. We have good risk management. And also to review afterwards, have a look back. I always look back. When I've finished trading, I may not do it immediately, but later in the afternoon, I look back to the signal I took and I evaluate, did I enter at the right point? Did I manage my stop loss correctly? What can I learn? How could I better manage that trade? I mean, I did a bad trade. It was a win. I mean, I did it, was it a Saturday morning? I mean, I kind of messed it up. It was a 3-minute signal. And, I got up to 36 pips. I moved my stop loss too early. No white candle had appeared, so there was no need to move my stop loss. So I got stopped out for about 36. So that's okay. My minimum, I aim for a minimum of 30 days, but that trade ended up going up 300 pips. I had 150 pip TP and it would have hit that perfectly. I just got stopped out. Very frustrating. When I look back, I realized I made a mistake. I didn't wait even for a white candle. I was too anxious to get in a profitable position and I blew it. So it was a profit. But again, I look back. I look back at that trade. It ate me up a bit. I thought, messed that one up. And I look back, I thought, gee, I was so stupid. Looking back. So it's good to review. Look at your wins and your losses, and also keep a journal, keep a track. They say, so a trader that's got a process-orientated mindset survives. All the rest will blow their accounts. So these are things, good to have a process. So I'm talking about, the 3 mindsets. We need the probabilistic, one of those hard words for me to say, a probability mindset. We need a process-orientated mindset. Then also, the last one very quickly, I've covered a bit, is to have a neutral emotional mindset. That is one of the hardest things, is to stay neutral emotionally. I know when I was a beginner trader, as soon as I pressed buy, I went into panic mode. I'm sure my blood pressure was rising. My finger was tightly on the mouse. In fact, this is a true story. I was once gripping my mouse so tight and I was so worried I was going to make a loss. I had the mouse hovering over the trade box on the X to close the trade. I held it so tight, click, I closed the trade. I mean, it was basically just through fear and nerves, Now I'm relaxed. I press, and I used to obviously through fear, I would click buy. And as the first, when I got to like 3 pips, 4 pips, I'd move my stop loss to break even. I didn't want to lose. And of course, what happens? You get stopped out. I mean, the amount of times I got stopped out for 2 or 3 pips when the trade went, all those things, it's not handling emotions. So these are the key things, winning traders, you'll have you'll balance your emotions. So you don't get too happy when you win. So when I take a good trade, I'm not cracking the champagne bottles. I'm not taking my family out to dinner. I'll mention to my wife, hey, I did well today. I got 100 pips, 80 pips. But I'm not, my emotions are neutral. And likewise, I don't get too upset when they lose. You've got to learn to manage those emotions. Yeah, I think I told the biggest loss ever made. I mean, I've told the story many times. I won't go through the process, but the biggest loss I made, I felt nauseous. I mean, I lost, hundreds of US dollars with a stupid trade, broke the rules, late entry, did everything wrong. I was nauseous. I couldn't tell my wife. I was so nauseous. I couldn't even eat breakfast. I couldn't get out my head. I mean, you can't trade when you're like that. So we don't get too happy when we win. We don't get too upset when we lose. We realize it's a business expense. If you've got a probability mindset, losses will come. So we don't get too excited either way, especially things like euphoria. More people lose money through euphoria than anything else. You get on a winning streak, you take a good win, euphoria blinds you, and that's how most traders blow their accounts. They think they're invincible. So we learn to not get too excited, also not to get fearful. Fear also will paralyze you, and most fear comes from trading at a lot size that is way above our ability. And so we'll come back a bit later. So powerful traders can keep their emotions under control, So it's basically it's a discipline to choose what you want most over what you want now. So it's a longer term mindset. And so that's the main thing I want to say. Those 3 things about the probability mindset, process oriented mindset, and the neutral emotional mindset. Then I want to talk about also the biggest psychological traps and how to fix them, because trading is very, very psychological. So I've got I've written about 5 things that can be psychological traps and how to fix them. The first one is over trading. I mean, that's what you've got to be wary of. I joked earlier about, charts looking like red and blue Indians have been having a fight, shooting arrows at each other. There shouldn't be thousands of arrows, over your charts. And so over trading is a key temptation, especially if you knew it's exciting, you've loaded, you put money in your account, you want to press the buttons. But over trading, is no good. That's going to lose a lot of money. It often comes through boredom. Those are the causes. If you're bored, the market doesn't, owe you anything. That's the thing. You can think that you deserve a trade. It's like entitlement. That's because in every other profession, if you work for 1 hour, you get paid for 1 hour. You work for a day, you get paid a day. So it's a different mindset. Obviously, if you were if you were a painter, and you did a job for 1 hour, you'd expect to get paid 1 hour. But trading is not like that. You don't get paid per hour. You get paid for discipline. You get paid for patience. And so often boredom or FOMO, fear of missing out, a desire for action, those kind of things. You think if you waited 30 minutes, you deserve to press buy or sell. But it's not like that. I mean, this morning, I waited almost 2 hours for that buy signal. And so I turned on the charts at 5, had a look already, that there had been a move that I'd missed that went off before I'd woken up. I had no FOMO. I wasn't going to try and enter the trade. It would have been a late entry. I didn't see any safe place to enter, so I just waited. I knew it was going to pull back, and then I knew it probably would go up again. So when it pulled back, then I started to get more interested. So I'm doing other things, keeping one eye open. But it was 1 hour and 45 minutes I waited. The longest I've waited for 3 hours. The longest I waited for 3 hours for one trade. But hey, if all you need is one trade and it took 3 hours work, that's worth it. All right, so way to get around that, to get over trading, is have a fixed session window. Don't just, if you think like this, well, I'm gonna, look at the NAS this morning at 6 and maybe the Nikkei at 2 o'clock, and then gold, I look at 7. And if you're trading random instruments at random times, you'll never be successful. I strongly encourage you, have a fixed session window, decide what you're going to trade and when you're going to trade. And maybe it's more than one instrument. And it doesn't have to be at one time. Like for example, the Nikkei does move, over New Zealand lunchtime from 12 o'clock, the Japanese Open, the Tokyo Open. But the narrower the frame you choose to trade, and the least number of instruments, probably the more successful you're going to be. Like Ty, I think 99% of the time he only trades gold. For me, I only trade the Dow, and then I have the NAS also on my monitor, and I trade both, but mostly the Dow. And I just trade between 5 o'clock and 7 o'clock in the morning. That's my window. I've got used to what the market does over that time. I know based on probabilities, if I wait for 2 hours between 5 and 7, it's highly likely I'm going to get at least 30 pips. And that's I've been trading for the last couple of years. I just take one window. You don't have to trade for 10 hours. The whole point of trading, that's the dream, is you can, in 2 hours a day, you can basically make a living. So to get away from over trading, pick a fixed session window. And so when I look at the charts, I'm mainly looking at this. When I do back testing, I'm not looking all afternoon what the NAS is doing or what the Dow is doing in afternoon New Zealand time. I just look around the morning when I'm trading and I get a good idea. Also, set limits for trading. Most days I will only take one trade, maybe two. And so I'm not out to trade, 10 times, every morning. I'm just looking for one or two good setups. And usually I just take one trade a day. And if nothing comes in 2 hours, that's it. I turn my computer off. Nothing today. Maybe there'll be something tomorrow. And so don't let over trading, cause you to take losses, because then you get into revenge trading. So again, just look at the charts, choose a window, and choose a window where there's movement. If you decide, for example, you're going to trade the Dow in New Zealand afternoon 3 to 5, well, good luck. The chance of you being profitable at that time, is minimal. But it's not always a long wait. I think the 2 trades I took last week, I literally waited 5 minutes. Waited 5 minutes, and I don't know, those trades were both around 80 pips, which are, for me, those are good trades. But then I turned my computer off. 80 pips, that's more than enough for me. There were plenty of pips afterwards. If I traded another 2 hours, I could have made more. But for me, that was fine. 80 pips, that's enough. I'm not greedy. That gives me a great lifestyle. So you never know how long it's going to take, but be careful of overtrading. And so talk about these psychological traps, overtrading. The second one is revenge trading. That is bad. Revenge trading, that will get you losing a lot of money. Are there any questions, Ty, for me? I'm just looking at, looks like they're just general ones. Okay, nothing.
There's a few. We can get to them at the end. I'm typing away and answering as we go.
Okay, cool. Off you go. So revenge trading, generally revenge trading, it comes from, I'll call it ego injury, and you've made a loss, and it hits you. I know what it's like. I've been there, done that, many times. But it's just incredibly tempting. I don't know what it is with revenge trading. When you lose money, you want to get it back. That's what it is. Revenge. You want to win it back. The worst you can do. I have done this, but not for a couple of years. Probably I only did this in my early months. Is like you take a loss, and you want to get it back, so you increase your lot size to try and get back. Don't do that. Please don't do that. To try, and that never ends well, And so beware of revenge trading. If you take a loss, sit on your hands, get away, walk away from your computer. Don't touch the mouse. Don't wait. Because what happens with revenge trading is you think the market's going up, so you press buy. And of course, it goes the other way, and you get stopped out saying, I think it's going down. Then you press sell. And what it does, it reverses and goes back to what you originally thought it was going to do, and it goes up. And before you know, you've lost 40 pips, 50 pips, 60 pips. It never works. So if you take a loss, take your hands off the mouse, take a break, take a deep breath, and wait patiently for another setup. It's good to have boundaries, as part of your process mindset, decide. There's a rule in trading. We don't mention this often, but, someone once said 3 strikes and you're out. If you make, 3 losses in a row, stop for the day, because it's not likely that's going to change. If you've made 3 losses, it shows that your mindset is not in the right place. So have boundaries. If you've made 3 losses, or maybe you've lost 50 pips over a trade or 2 or 3, then stop for the day. But I always say that if you follow the rules, it's impossible to revenge trade. It is. If you follow the TrendForce rules, TAS, I won't go through all the rules tonight. It's impossible to revenge trade. So don't revenge trade. Stick to the rules. If you make a loss, take a breath, move away. Don't look at the first place to enter. All right, then the next one, the next psychological trap is also lack of patience. Now, I wish there could be a quick solution, be patient. It's not as easy as that. But I mean, lack of patience really it comes from the desire to make quick profits. I think we all know by now, those who've been part of our community, trading is not a get rich quick scheme. It's just not. And patience, you don't know what you don't know. I had no idea. I've said this 100 times, how much patience is needed. I, by nature, am a patient person. I'm patient. I'm disciplined. That is my temperament. Fortunately, I haven't had to work on that. But I had no idea that what was needed in trading was a whole nother level of patience and a whole nother level of discipline. And you don't realize how much patience and discipline is needed until you've traded for a while and you've made some losses and made mistakes. And so that's one of the big psychological traps, is lack of patience. There is no quick way to make money trading. It takes incredible patience. I mean, I don't know if what Ty said, the quote I can't remember, but it's a common quote in trading that trading is 90% waiting. Most of the time you're waiting. I mean, I waited this morning 1 hour and 45 minutes for that buy signal. And then I don't know how long I was in the trade for, went longer than what I thought. Maybe that played out over 12 or 15 minutes. I can't remember now. It was longer than most of my trades, but I waited for a lot of the time. It probably was 85% of that session was waiting. And so you've got to wait and you've got to be patient. Again, you've got to stick to the rules. That's one of the keys. If you stick to the rules, you're not going to be lured into trades that are 50-50. Wait for those golden setups. We want to talk more about the golden setups, the very high probability trades that are likely, to hit the TP2, TP3. And so patience is really, really key. That only comes over time. You got to develop it, learn to sit on your hands. That's the best thing. You got to wait, be patient, wait for the right setups. And then the other one, the fourth psychological trap, I mentioned this at the beginning, is holding on to losers and cutting winners. Some experts say that is the key reason why most beginner traders lose money and fail and blow accounts. I think the saying is they're optimistic about their losing trades and pessimistic about their winning trades. And so they tend to, when the trade goes the other way, they don't close the trade out. They hold on to it. And when it's a winner, they cut it short for fear of making a loss. So that is one of the biggest psychological traps. I mean, I want to be honest, it's still the hardest thing is closing a losing trade because you got it wrong. And it's hard in the beginning, but you get used to it. And, I think in the feed in the week, some are asking, some guidelines. I mean, there's keys. You can look, the MACD is a good example. When the MACD starts closing the gap of the trend zone, when the signal line and the MACD line start getting narrow, that's a good sign that trade is going nowhere. When there's a crossover, definitely, it's probably the end. So, I mean, there are ways. I won't spend a lot of time, but it's very clear when the trade's going the wrong way. And so the main cause is pain avoidance, fear of missing profit, fear of being wrong. And so, traders hold on to those losers. And I think I said it at the beginning, never increase your stop loss. I mean, I'll be honest, I've done it before and I've got away with it. But most of the times you will lose money. And I am worse off. My account is worse off for the time. It hasn't been a while since I've done it and I don't do it. But never increase. If you get it wrong, the worst you can do is increase your stop loss, hoping it's going to go the way. That is how traders lose money and blow accounts. And so you got to have, the solution is always have a fixed stop loss. So when I enter buy or sell, I'll fix my stop loss and I'll leave it there. I'll never, ever increase it. So that is one of the disciplines of trading, is to keep your stop loss where you set it, never increase it. And also you need to have, a trailing stop loss strategy too. And as I said, I think the white candle is one of the best things.
It might just be me, but your sound has disappeared.
Okay, so I was talking about holding losers, cutting win, that is one of the big psychological things. I can't tell you that. I mean, holding losers hasn't been my weakness, but cutting winners, that was, I hate being wrong. That's me. I hate losers. I hate taking losses. So I would cut a lot of my winners short. So that's, I think, where I've had to grow as a trader is let my winners run. So I'm way better than what I used to be. But often they say people with a very, very high win rate they often make less money than those with a low win rate, because skilled traders with the low win rates end up cutting their losses short and letting their winners run. While those with the high win rates, they may not let their losses run, but then they cut their winners short. So that's one of the real psychological blocks. I was saying too, so we got the white candle. That is hugely helpful. I mean, the mistake I made with my trade on Saturday, I moved my stop loss just too early before there was a white candle. If I'd waited for the white candle, when I went back and studied the trade I took, if I just, followed, used my stop loss in the 3 minute on the base of each bullish candle, I would have hit my 150 pip target. But I was too anxious to lock in some pips. And so wait for the white candle. Occasionally, when you get these huge candles that shoot straight up, the white candle may plot a bit late. But generally, with the average trade, the white candle is the best thing we could have done. So those who may be new, there's a white candle. That's a stop loss warning candle. That's a great sign to move your stop loss into profit, or to start moving it, into a real profitable position. Like we took the trade. Not everyone was on our live trade we did on Thursday. There was a sell. I mean, I didn't panic at all. It was a bit of a risky trade. But I didn't drop my stop loss right into profit. I mean, we were up 10 pips, then we were like minus 20 up. That's how I trade. I wasn't panicking. I could see the trade was going to drop. And only when the white candle came, when the trade started running, did I begin to move the stop loss. And I think, although the trade went for 90 pips, we locked in, on the live trade, we locked in 70. Everyone took pips. So don't panic, don't panic, let the winners run, wait for the white candle. So there's no need to move your stop loss too early before a white candle plots, and that's I mean, the code for the white candle is pretty complicated. I actually forgot the other day, what did I do there? And I went back to look at the code, and man, no one would have thought of doing what I did right there. It's a really good code. So generally, like 90% of the time, or even higher, if you take a trade, no need to panic before the white candle, and no need to move your stop loss too quickly into profit. All right, then the fifth psychological trap is like, I mean, hopefully it doesn't apply to us, but changing strategy too often. A lot of traders, obviously not talking in our circles, people are jumping between strategies. They don't trust the system, they don't trust the strategy. And very often losing traders, they'll blame the indicator, they'll blame the strategy. But often it's we can develop a victim mindset, the market's out to get me. All those things are lies, You've got to, stick with one strategy. For those with TrendForce, obviously we totally believe in the strategy, the indicator and strategy that we've developed. So stick with the strategy. It does take time to master. And as I said, I prepared two talks on trading psychology. I'll do one next week. So I'll talk more about, the timing, the months it takes, etc., etc. But back test, look at the strategy. Look at what makes good buy signals. Look at what makes good sell signals. Look at the good, look at the bad. But changing strategy, I mean, there are multiple strategies out there. I mean, I've looked, Ty knows, I do hours of research. One of my main functions with my role in TrendForce is doing the coding and doing most of the trading, but I also do a lot of investigating. I do a lot of research. I look at other strategies. And I still think we've got the best. If there's something better, I'd say, let's pack it up, let's do that thing. But I think we've really got a good strategy that works, and you got to stick with it. It does take time. So that's another psychological trap, is to keep changing strategies. Then I want to go to my fourth major point. This is quite quick, and that is about identity. I mean, I didn't think I'd finish this talk tonight, but really I've realized this was I like teaching, in church context on identity, And this is the bottom line. Who you believe you are matters most, as a trader. Who you believe you are matters most. And to me, that's like a major insight, Who you believe you are determines, how you're going to be successful as a trader. And that's why I'm quite big on canceling lies. We can't agree with things that are not true. And what we end up thinking is what we become. I mean, there's a Bible scripture that says that, and that's true in the world. People, secular psychologists will teach on the power of thinking. People generally don't change much beyond what they think about themselves. And so you got to be very careful about not agreeing with your fears, agreeing with what I call lies, things that aren't true. For example, if you say these kind of things, if you say, I'm inconsistent, what's going to happen? You'll end up trading inconsistently. I mean, if you say I panic too early, then you're likely to panic. If you say I'm not a disciplined person, you'll end up breaking the rules. If you say I'm a loser, you will lose. If you say things like I always miss the golden setups, I tell you what, those things become self-fulfilling prophecies. You always will. So it's so important that we don't make negative statements about ourselves. I mean, I believe I'm very strong on the power. I make, declarations every day, and I make trading declarations. I say I'm a highly profitable trader who is always well set up to take low risk, high probability trades. So that's what I believe about myself. And I say that every day. And I believe that comes to pass. So those are kind of good things for mindsets. Occasionally, you may go through an inconsistent patch, but don't say you're inconsistent. Be careful not to vocally, give vocal power to those thoughts, those negative thoughts. So who you believe you are matters the most. So, professional traders, profitable traders will always identify as being disciplined. They'll identify as being calm. They'll identify as being logical. They'll identify as being risk focused and also process driven. So that's what I would like to say. I'd like to say I'm a disciplined, calm, logical, risk focused, process driven trader. And so we got to really step into the identity of the trader we want to be, before the results show. So again, these are important things. I believe in positive confession. There was a famous book, a secular book written years ago about the power of positive confession. And so that's important, is to have the identity, begin to see yourself. You'll never will rise above how you see yourself. And that's why I always see myself, I'm a disciplined trader. Although I take losses, I'm not a loser. Although maybe I lack patience now and then, I will never say I'm an impatient trader. And so we will go through cycles, So that's the fifth thing I want to say before I'm getting near the close now, that there's the emotional cycle that every trader goes through. Now, these cycles are true for the greater trader environment. And these are the ones you go through: optimism, excitement, euphoria, anxiety, fear, panic, despondency, regret, then acceptance and mastery. So there's a lot of emotion that we go through, but eventually you'll come out strong, and that's why I don't want to talk a lot about the actual process of trading, but it is a process. There is no shortcut to being a trader. It's not like any other course. You can do like a trade course, to become a plasterer. I do a bit of plastering now and then. I always thought I'd love to do a course in plastering to improve my plastering if I need to like repair things or do plasterings. But if you do the course, it's simple. It's in a clear time. By the end, you'll be able to do it. But trading's not like that. It's learning to eliminate emotions, to bring them under control. Or could I say to manage our emotions. Otherwise, we'll go through all this excitement. We'll go through that euphoria. And then we'll end up making losses. Then there'll be anxiety, fear, panic. I've blown an account. Depression, despondency. But eventually, once we learn to manage our emotions, we won't be blown around, by the ups and the downs of trading. The reason why I just wanted to say this before I close, we're almost coming to an end. The reason why most traders fail is because of this. They seek excitement, not consistency. So, it is. When you first trade, it's like exciting. You turn on the charts, now there's the potential, to make money, and your excitement can blind you. You're gonna end up lacking patience and discipline. And so we should want to be consistent more than excited. They also want to be right, not profitable. They just want to be right all the time. And for me, that was my weakness. I would be right. I'd have a high win rate, but my profits always wouldn't be high. And I would say to myself, gee, if I took more losses, then I would actually have a bigger trading account. I've obviously grown in that over time. So my fear was loss. I wanted to be right. So I'd take the trade, get out way too early, lock in small profits, and take a few losses, but then have a small account. Now, I've actually learned from Ty. Ty makes more losses, but he makes more pips. And so, those are the things we go through. They're also obviously, traders fail because they lack patience. What I'm saying tonight, they underestimate the psychological pressure, which is really real. So there's no other job that you'll go to from 9 to 5 and you'll come back having less money than what you had at the start of the day. But trading, you can have losing days, losing weeks, and that there is a lot of psychological pressure. Often traders also fail because they don't, respect risk, or they trade without rules. That's why we're very strong on rules with TrendForce, or they don't track their data, they don't journal. And of course, it's a quote by Ty, if you treat trading like a hobby, it'll pay like a hobby. It should never be a hobby. Otherwise you're going to go nowhere. So success requires the opposite. We should be seeking consistency. We want to be profitable. We want to be patient. We want to handle the psychological pressures. We want to respect risk. We want to trade with rules. We want to track our data. We want to journal, and you want to treat it as a business. All those things are things we have to strive to get right. And so, winning traders. A few more points before I close. Winning traders do things differently. I mean, number one, and I've seen this over and over in the research I've done, they protect their capital like gold. Every time you press buy or sell, obviously there's a risk, and you don't want to burn up your capital. Early mentors always said, protect your capital. I think PYC. And I think one trader once said there are 3 rules. Number one, don't blow up accounts. Rule number 2, respect rule number 1, which is don't blow up accounts. And rule number 3, trade with a small lot size. Someone once said you got to trade with a lot size that keeps calm. One of my mentors said, and I think I said it earlier, it's not my own quote, that fear comes from trading with a lot size bigger than our ability. That comes from greed, FOMO. You want to make money quickly. There is no shortcut in trading to trading with a big lot size. I mean, I try to move my lot size up very quickly. I mean, I did silly things like in my first year of trading, I bumped up my lot size, traded the open, got 100 pips one night, felt like a millionaire, lost it the next night, couldn't sleep. Those are the things you go through, all these waves, these emotions, But I'll tell you what, don't increase your lot size too quickly. If you don't understand trading is a process, you're going to try and make money. The first phase of trading is simply to be consistent and to learn to stick to the rules. It's not to make lots of money. And so I remember I tried to increase my lot size too much, and then eventually I decided this is not working. So I set my lot size to 0.1, which is the lowest lot size in the Dow or the Nas. And I traded for months and months. I disciplined myself to stick to the rules just with a lot size of 0.1. And so it was great, because if I made a loss, stopped out for 15, I lost $1.50. I didn't get depressed or feel nauseous. Likewise, when I had a 30 pip trade, I made $3. I didn't feel euphoria. And so I did that for months and months until eventually I got rid of the emotion. Then slowly I increased it until eventually, I'm not telling you my lot size now, but I'm trading with a nice lot size that makes me good money. But I've got to, with my lot size now, if I make, if I lose, if I get stopped out for 30 pips, I mean, that's a lot of money, but I feel nothing. Okay, it's a loss. I know I'm based on probabilities. I know what my win rate is. It's not going to be a problem. And so I would encourage you, don't have the mindset that in your first year of trading, I'm just going to make a lot of money and try and increase your lot size too soon. You got to increase it so you can stay calm. So it must be small enough, whatever the size is, that you can stay calm and not trade with fear. I remember when I upped my lot size, I was panicking when I pressed buy or sell. Man, it was the stress. I was sweating. My blood pressure went up. All right. So winning traders, what they do differently, they protect their capital. And in terms of risk, they think percentages, not dollars. And I know different people may have different opinions, but every trade, I'm not thinking I'm risking so much. I'm not risking $100 or $1,000 in this trade. I'm thinking I'm just risking 2%. And that takes all emotion out of the trade. I'm thinking in percentage. So they're not thinking I'm going to risk $500 in this trade. I'm risking $1,000. As soon as dollars come in, that can affect your emotions. So I'm thinking purely 2%. So in my trade box, I know others may trade differently. That's cool. If you have another approach, I never put dollars in that little box. I stick it on pips. And so I've always said, I want to be a mechanical trader. And so I don't have any dollars on the screen. I know, because maths is one of my strengths. I mean, in my mind, I can work it out, but I'm not ever looking at dollars. I'm just looking at pips, I'm looking at percentages. I know I'm risking 2% based on the size of the candle. And then I know I'm looking for a 2-to-1, 3-to-1, sometimes 4-to-1. I'm risking 2, I'm going to make 6. That's how I think, So most successful traders, winning traders, they're not having dollars on their screen, because that's a sign you just want to like make money. It's all part of the process. So I never have any money on my screen ever. All I have is pips, and I just work in percentages. Then the third thing is they also know their stats. That's very important. So I know my win rate. I mean, I win, more or less 80% or so. I do take losses now and then. Sometimes it's 90, but I know what my win rate is. So that doesn't matter. If I take a loss, I'm not panicking, because I know statistically, I'm going to win 8 out of 10 or 16 out of 20. And so I know my stats. I know my win rate. And also I know my expectancy, I know that I'm a profitable trader. So, and it takes a while to get there, so I don't want to kind of boast, but I know that I'm profitable. Sometimes it happens that the first trade of the week is a loss. It doesn't put me off. It's not going to depress my week. I know I'm a profitable trader. It's not going to spoil my week. Maybe that's the one loss out of 10 I'm going to get this week. It doesn't worry me, and that's with successful traders. They know their stats, they know their win rates, they're not getting emotional with a loss. They don't revenge trade. They simply wait for another good setup. Someone once said that professional traders operate like engineers, not gamblers. And I like that. They follow one strategy. I've kind of touched on that. They're not swapping and changing between the latest thing that comes along. And they trade a bit more, they trade more like machines, and that's why I like to say you got to be mechanical, you got to be human when you review stuff, but I believe in being, a mechanical trader. And just the last couple of points, you got to have, let's just see, I've still got a bit of time, a few minutes to go. You got to have also a professional trader's got a mindset that's these kind of 4 things. They know they've got an edge, they've got discipline, they've got emotional control, and they've got consistency. Those are the 4 things. You got to have an edge. And so I believe TrendForce has definitely got an edge, and that's been proven. You want to trade with a strategy that's got an edge. If you've got an edge, there's definitely going to be a positive expectancy. Then also professional traders, they trade with discipline. And so that's following the rules. We've got to follow our rules. That's really key. And also they have emotional control. They stay neutral through wins and through losses. And also they're consistent. They show up every day like a pro. I want to think every time I turn on the charts, I'm a professional trader. I'm going to stick to my rules. I've got my approach. I've got my entry criteria. I know where I'm going to put my stop loss, things like that. Those are important. And so finally, what can I say? Just some practical steps. So you got to have, as a trader, these are also the mental things. You got to have clear non-negotiable boundaries. Otherwise, you're going to lose money. How many losses are you going to take a day? For me, I don't really make 3 losses in a day. I've done that before, but it does happen. I could still do that. But you need to say how many losses you're going to take, and you got to stick to it. Say 3 strikes and you're out. How many trades per session? If you don't decide that before you trade, you're going to be clicking on every single big candle that comes along. I just go for 1, maybe 2 trades a session. I just wait patiently for the right setups. And those are the things you need to know. You also, again, choose your hours. I've talked about, don't chase trades all day, choose quality over quantity. Find a window that is going to produce good volatility where you can trade. And also, keep a journal, and again, keep a small lot size. And then finally, I wrote out some final thoughts just in closing before I hand back to Ty. So trading is not about predicting markets. It's about managing ourselves. So I want to say that again. Trading is not about predicting markets. It's about managing ourselves. That's the key. And success comes to traders who master patience, risk, and emotional neutrality. And my final point, our strategy doesn't make us profitable. Our discipline does. So I'll leave you with those thoughts. I think I'll leave it there. I've been talking for almost an hour. I've packed a lot in, and I'll hand back to you now.
That was loaded. Thank you so much. My word. I was typing up some of the key points you were saying and putting them in the chat and answering some questions. But guys, I'll do my best to grab all of that and put it in the video description at the bottom underneath this on YouTube if you're watching this later. But thank you, Dad. There was so much gold in there. A lot of it is, well, I'd say probably all of it actually is heavily battle tested because it's coming from your experience.
Totally.
This is the hardest thing, guys. Is some of the things you may have heard tonight you haven't been tested in yet, and so it's theory. But some of these lessons, unfortunately, the only way to learn them is to pay for them, and that is the lessons that stick the most. And losses hurt. Doing things that are dumb hurts. If you're trading with money and risking too much, etc. So do your best to trade with less than what you want to when you make that transition from demo to live. Everything in you, even if, and I say this again, like that transition going from demo to live, even if you've got an outstanding win rate, even if you've got, 1,000, 10,000 real dollars, doesn't matter. I would love you to trade at 10 times less the amount that you are qualified to, if that makes sense. Even if you load that account up and it's like, right, I'm risking my 1%, my 2%, cut that in half and cut it in half again, just on that first week or those first few days mechanically, because there is a different psychology that kicks in when you start to do it with real money. And you might even just make a few manual physical mistakes in that transition too. I've done it. I've heard it all. And it's crazy how just that transition, you just want to give yourself every possible opportunity to protect your capital. And it's a marathon, not a sprint. So again, Dad, thank you so much. There was tons of gold in there.
All good.
I can see the chat lighting up with thank yous and all sorts of fun fire emojis and etc. Nada, thanks so much. Lots of good points. Oh, chat moved when someone pushed something. Melvin, thank you so much. That's a great session. Angela, so much value and wisdom packed in an hour. Thank you. Kylie and Aaron as well. Awesome. Thank you both. Cool stuff, guys. Well, I did my best to answer pretty much every question that was happening on the side. Most of them weren't directly related to mindset. There was a few little technical ones in there, so that's all good. But otherwise, that's us. We are 1 minute away from 9 or less. So that was a loaded session. We will be back Thursday morning for our live market analysis at 5:30 a.m. New Zealand time. So we'll drop that link and a reminder in the chat the night before and the Zoom link just before we launch. Otherwise, trade safe and we'll see you in the chat. Good night. See ya.